We have three kinds of inventory accounts in managerial accounting. Raw materials is the stuff that comes in from vendors. It transfers into work in process, which is production. When the production's finished, it moves from there to finished goods. So we're increasing finished goods for the combined sum of the total costs of jobs 1 and 2, which is $21,360 plus $10,580. Add those two together, and then you have $31,940 debit finished goods, credit WIP. So that's the 4 entries for the similar exercise to X1713. Okay, so the other problem that you have to work on for homework, assignment 3, is 17-1B, problem 17-1B. So we're going to do problem 17-1A on page 821 as a similar problem to that. Okay, so I'm going to scroll down here. Hopefully you can see this. And again, you should have the file. The flow of materials. You buy inventory from vendors, and most of it's on account. Almost all of it should be, which means you receive it in, there's a packing list, and then there's an invoice, and then you owe the money, probably net 30, so accounts payable's involved. So it comes in, and you're going to increase raw materials, inventory account. These are inventory asset accounts, 3 kinds of them. So we'll be increasing raw materials and increasing our liability AP when they come in. The bill's paid when it's due, and you, in that case, with debit AP and credit cash. But you don't have to worry about that on problem 17-1A or B. Anyway, after it comes into raw materials and the production department needs it, we're going to increase the WIP inventory account and decrease raw materials. When the product is finished, we'll decrease WIP and increase finished goods, which is the final inventory account where it's put just before it's shipped, near the shipping dock. When it actually leaves and goes on a truck to go to customers, then we will reduce the finished goods inventory account and increase the cost or expense called cost of goods sold, or COGS, short version of managerial accounting, ACC121. So we'll increase COGS and decrease finished goods when the stuff leaves to go to customers. So that's kind of the picture of how it works. Entry B, we're going to be recording indirect material costs like we did in exercise 1713, which adds to the overhead pool. Then we'll have deal with labor in entry C, which is increasing WIP and indirect labor for factory overhead to go into the factory overhead pool. We'll deal with other kinds of expenses in F, both that which pertains to overhead, factory related, and office expenses are not part of overhead, and there will be period costs. Overhead expenses are product costs, the third type of MLO, and S&A expenses related to the office are recorded monthly as period costs, not part of overhead, not part of the product costs. Entry D, entry G, sorry about that, we're going to apply overhead to WIP. And we had to do that in exercise 1713. And then in H, we're going to add up all the materials, labor, and overhead for jobs completed, or I think we're given a total, and transfer that from WIP to finished goods. And then we're going to actually move the stuff out and ship it and relieve finished goods and increase cost of goods sold. So the entries, problem 17-1A. And you might want to try to figure this out as we go along. So what are they saying here? GEACO uses a job order cost system. The following data summarizes the operations related to production for August. I'm on the bottom of page 821. Entry A, materials purchased, and actually a more accurate way to say that, and I penciled that out in my book, materials received on account, $660,000. So we're going to increase, and I like to call this first account raw materials instead of materials, because in some companies they have a materials expense and it can get confusing as to what kind of account it is. So let's call that first inventory account raw materials. And since it's an asset and we're increasing it, then you will have to, that's right, debit it. How efficient. As I was drinking tea, you came up with the answer instead of me just blabbering everything out and you getting no chance to participate and think. That was very good that you came up with that, whoever you are that's watching this. Maybe no one's watching this video, and it's a complete failure, in which case I can pretty much say what I want and move on. So they said the magic words on account, so that's why we have to credit accounts payable for the liability of stuff purchased that we have to pay for later. Entry B, materials requisition. Yeah, that's an official word. It's has been used in manufacturing. It's definitely used in the military, but a less confusing word or way to put it would be materials issued to production, 577,500, of which 73.5 was for general factory use. This is a bit tricky. The combined sum of those numbers is what's leaving the stockroom. The 73.5, general factory use, that implies factory overhead. Well, that needs to increase the overhead pool, and the 577.5 is actually going to go to production and increase the WIP account. We're increasing inventory, we debit it. We're decreasing it, we credit it. So, what ends up happening on this entry is the first piece will debit WIP for 577.5 minus 73.5. It said the total was 577.5, of which means you got to subtract the 73.5 to get to the 504, and you're sort of backing into the amount that was direct materials. So what's this deal with general factory use? FO expense dash IM. Debit that, which is the factory overhead related materials for 73.5, and the total of them, the 577.5, is what has left the raw materials inventory account, so you're crediting it. Okay, entry C, factory labor used, of which 95.5 was indirect. So charge the total minus the of which to get the direct labor, which adds to WIP. You're going to have an FO expense debit for the indirect labor amount, and all of that value is what's going to be paid initially as a liability, and then direct deposits are made later. So first debit, let's go with WIP again, will be 681.5 minus 95.5, or 586. You're backing in by taking the total labor all together and subtracting out the indirect piece to get the direct piece, which gets added to WIP as an inventoriable cost. The 95.5 that you're given is FO expense dash IL. That's part of the overhead pool. And the credit, which is the whole payroll liability, will go to a word symbol. Actually, the account wages payable, 681.5 for the total labor used in entry C. Here we're skipping parts D and E. Don't do parts D and E on problem 17-1B for homework. And, okay. F. You've got two kinds of depreciation: office building 88.2, office equipment 45,150, and factory equipment 30,450. Only the factory equipment is overhead cost. The other kinds of office depreciation are period costs. Let's see what the first debit is. I just took them in order. We've got office building first of 88.2, so I debited depreciation expense dash office building because depreciation usually involved. There can be many assets that are listed, so I like to have sub-accounts for depreciation. And the next one was office equipment, so I debited depreciation expense dash office equipment for 45,150. Then I took on the FO, the factory related depreciation, and I used the same scheme that we do for indirect materials, indirect labor, and any other kind of factory overhead, whether it's utilities or whatever it is. Debit FO expense dash depreciation 30,450 for the factory equipment piece of this entry. Then I like to have related accumulated depreciation accounts for each type of asset. So we've got three credits: AD office building, AD standing for accumulated depreciation, which is a boring thing to rewrite over and over again. AD dash office building 88.2, AD dash office equipment 45,150, AD dash factory equipment 30,450. Entry G. Factory overhead costs applied to jobs. Applied to jobs, production, work in process, same thing. That's a glorified accounting way of saying that third type of product cost, factory overhead, is about to be added by you to WIP. Debit WIP and credit FO applied. It's that simple. Actual overhead costs get debited as they come in, but you don't apply overhead at actual. You use actual to measure how much dollars there are and later develop a rate for the next year, and you use an application rate as you go to charge inventory because you don't have time for actuals to come in. You just use them to study it and develop a new rate later for the next year actually. So debit WIP, credit FO applied on entry G. Entry H, jobs completed. What does that mean? Another way of saying that is jobs transferred from WIP to finished goods. H71A. From WIP is the account going down. To finished goods, the account going up. Assets, when they go up, debit. When they go down, credit. Debit, finished goods, 871A, credit, WIP, 871A. Lastly, cost of goods sold, $860,000. Thanks a lot. That's really helpful. Another way of saying what in reality has happened: if cost of goods transferred out and shipped to customers, leaving finished goods to go to customers, debit COGS, cost of goods sold, or you could even think cost of goods shipped. Some companies call it cost of shipments. $860,000, credit finished goods. It's going down. They're leaving the building. $860,000. Okay, again, this document should be available to you to look over. If you have any other questions, feel free. Otherwise, you should have a couple of very similar problems to do assignment 3, which is X1713 and 17-1B. Don't